Hi, Matt McAleer, Director of Equity Strategies, July 23rd, just after the close. Turnaround Tuesday strikes again. Remember, we had weakness the last 10 days heading into this week. Not extreme weakness, just supply. Supply through new issues, supply through new securities, whether they're SPACs, IPOs, just leaning on the market. And when we got that pressure on Monday, it was really a difficult bet to make that we would finish the week out up 3% on the NASDAQ and up, let's call it 2% on the S&P and the Russell 2000. You started to see a bid form late Monday afternoon. It's always a positive when you can finish off the lows into that 4 o'clock bell. Traders, especially larger traders, shorter term traders, like to make their bets on the next day within the last, let's call it, hour of the market. So there was a solid bid Monday. Really took me by surprise how that carried over into Tuesday. Very strong throughout the day and got stronger as the day went on and did get some breadth. Remember what we've been talking about, weakness in small caps, weakness in mid caps. Midday Monday, the Russell 2000 was down about 8% from its high. That's a good little pullback over the last 6-7 weeks. Some demand came in, stabilized that mid and small cap area, and then we saw the sectors that are working just take over again. Technology, consumer discretionary, very strong. Really bolstered some of our holdings, namely QQQ on the indexes, but also some of the individual names that are in the tactical portfolio. Adobe, Microsoft, going out at all-time highs here. Some of the areas that we'd like to see a bid come into that are frustrating right now is in the biotech area. We do hold biotech in our US ETF and in tactical trend, and that's just been 2 steps forward, 1 step back. 1 step forward, 2 steps back. No real damage, but take a look at XBI, trading between that 123 and 135, 136, 137 area. Like to see some higher lows be put together there. So in terms of what we're looking for next week, let's see if the bid remains in some of the inflation, on-again growth stories. We saw basic materials and metals finally get a bid late last week, early this week. Remember, they've been weak. There's been a lot of talk about the fact that this economy has already peaked and is on its way down. We don't know if that's the case or not. We're leaning towards the story or the bet that if it is on its way down, that's fine, as long as it can stick and show some growth and strength over the next 12 months. We take 3%. That's growth we've gotten used to here. So in terms of what we see next week, let's keep an eye on that 10-year Treasury. Back up to about 130. Took some pressure off of that story that the economy has already peaked and is fading. Let's keep an eye on rates. John will have a video up talking about what he's seeing in both the taxable and in the tax-free muni market, and we'll take it from there. Have a great weekend. See you next week.
Good afternoon. It's John Mousseau. I'm the CEO and Director of Fixed Income at Cumberland Advisors. It's Friday afternoon on July 23rd, after the close. A real doldrum week in bonds when you look at it. You had the 10-year bond 129 to 128 down a tick. 30-year bond 192 flat. Nothing happened during the week. Muni yields very unchanged. 10-year 0.84 to 0.83 on the AAA. 135 to 136 up a tick on the long 30-year AAA. So really a nothing week there too. Although deals were very well subscribed for, this continues. So this is a sign of a summer doldrums. Not a whole lot going on. What did we have this week? Cross currents is what we had this week. We had initial jobless claims higher with a 400 handle on them. Market was expecting down mid 300s. Is that an aberration? Probably so. We'll watch it again next week. Other cross currents out there, news about the Delta variant on the coronavirus, very important to watch. That's probably keeping a lid on rates just because there's concern that the economy is negotiating this. At the same time, what do you hear on the front? Companies raising prices across the board. And I can tell you, just anecdotal evidence. I took an Uber last night, and an Uber ride that was normally $50 to $60, and they wanted $170. I waited around a while to take a different Uber. But it tells you that prices are moving in that direction, but the bond markets really haven't reacted to it. Why? The Fed's done a masterful job of saying that inflation is transitory, and we will see. And as we said it before, if you move out towards the end of the year and you're suddenly printing 0.1, 0.2 monthly numbers on CPI, well, then indeed it was transitory, and all the price increases that we're seeing now and in the first 6 months of this year would be transitory. We'll have to see about that, because it's very hard for us to recognize that labor costs, which have skyrocketed in many places, will actually come down to that point where there's not some embedded inflation. So really, the story about inflation is going to be ahead of us, and we're going to watch it. Next week, we have on the docket, again, initial jobless claims. We'll also have new home starts. We had existing home starts this week, and they show strong growth, but moderating somewhat. So it's kind of the story across the board. Most important news of this today was probably the Cleveland Indians changing their nickname from the Indians, and they will now be the Cleveland Guardians starting next year. A lot of friends of mine are Indian fans. I don't think it's going over real well. So, time to start buying Guardians merchandise. Hope you all have a great weekend, and we will see you next week. Thanks a lot.